The subject for today is cash. Now, cash is not something I usually get very excited about, and it's something I've never really invested much money in because I always felt that you can get better returns in other asset classes, particularly in shares. And certainly all the research I've ever done has shown that shares give you by far the best return long term. If you look back in history, going back 100 years, 200 years, 50 years, 20 years, you'll find all long-term periods, shares far outperform every other asset class, particularly cash, bonds and property, believe it or not. Even though if you live in the UK, you think property would outperform shares, it's not the case. So what I did was, back in January this year, 2020, I wrote a blog saying cash is not king, trying to be a bit witty, a bit of a play on the usual saying that cash is king. Because I do, for the reasons I gave you, that stock markets do rise far more than cash does historically. But then we got hit by the coronavirus, and that completely changed my mind because there was a big stock market crash, and anybody sitting in cash would be quite smug by now and read my blog thinking, well, cash is king. And they certainly would have been right, and I was wrong. I have to admit that. Because in the short term, anything can happen, of course, and stock markets are designed for long-term investment. So the coronavirus meant there was a big stock market crash back in February to March this year, and as a result, cash would have been a great thing to be in. Of course, there's been a big rally since then, not fully recovered all the losses made, but it still seems to me wise to be fairly well invested in cash now, because it does look on the cards that the stock market could crash again, and more heavily than back in February to March time. Now, not the only person thinking this. The most famous investor in the world, Warren Buffett, the most successful investor ever, his company, Berkshire Hathaway, has a cash pile, wait for this, of $137 billion in cash. Now, it's not true that it's exactly in cash. It's in cash, or what we call cash equivalents. A lot of the money is invested in US so-called treasuries, in other words, US government bonds. But it's cash or near cash equivalent that he's invested in. Now, why would that be? Warren Buffett's a modest man, in spite of his huge wealth. And he claims it's because his group of companies owned by Berkshire Hathaway, his investment vehicle, own insurance companies, and they have to have huge cash reserves to meet claims. I'm not convinced he's being totally straight with us on that one. I think it's a combination. I think that's partly one reason, but I think he's also stockpiling cash because he can't find value in the US stock market, which is on any measure highly overvalued. So the lesson there is, if you're feeling a bit cautious and you think the stock market could fall again, maybe you should invest some more money in cash in the short term. Or if you're already invested in a portfolio of shares, perhaps through an independent financial advisor like ourselves, where you'll have a strategy on a wrap platform like us, then you may, instead of investing in cash, you may consider changing your attitude to investment risk by reducing it to a lower level. And what the effect of that will be, if you reduce your attitude to investment risk, it just means you have less money invested in shares and more money invested in these other asset classes I mentioned earlier, cash, bonds and property. Therefore, if you're being cautious and the markets do have a big fall, it will have very little effects on your business. But as I always say in these videos and on my podcasts, the stock market can remain irrational longer than you can remain solvent. So even though a further big fall looks likely, when and if it will happen, only time will tell. So it's over to you to make your own decision, but just bear these facts in mind.